right, well, let's find out where your conviction is and get into pro picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. All right, we saved this because in a healthcare chat, we should be talking about the diet and obesity drugs, because for a long time, those performers were, insane. You double, tripled your money. But now those have come off, and your top idea, one of them is Eli Lilly, which of course is on the forefront, along with Novo Nordisk, which makes Ozempic, of these diabetes and weight loss drugs. But it's come off quite a bit.
It has. This is definitely the longest I've talked about healthcare without talking about weight loss drugs. So that's good. It's nice to talk about the other areas of the sector. But yes, certainly the most topical area in healthcare right now. And Lilly is my top pick, top holding in our funds, because it is in the leading pole position in the fastest growing area in all of healthcare right now. If you look at their earnings growth over the next 5 years, they're probably going to be growing earnings at least 20% per year. Right now, they're generating about $35 billion in obesity and diabetes revenues. That's going to at least double over the next 3 to 5 years. So there is huge growth from Lilly right now. So
why has this and Novo Nordisk pulled back?
I think the biggest reason the last 2 weeks has been tariffs. Pharma companies are being sold. They're not as safe from, normally in a recession, in a kind of typical recession, pharma companies would be very safe. You look at the GFC, they still were able to grow earnings throughout the worst recession in modern history. This is a little different with the tariffs. So I think that's the biggest reason that they've sold off.
But they were selling off before.
Lilly missed their guidance, or they missed their numbers in Q3 last year. They reported in Q4, but they overpromised and underdelivered in the second half of last year. The biggest reason for that was they had, I think, underestimated this stocking and destocking environment where customers will order a lot in advance, and there were supply chain issues as well. And then in the next quarter, they weren't selling as much because people were just getting rid of inventory.
And I should say, Lilly, it's sold off. It's down about 20% from its peak, and it's been volatile for the last year. Whereas Novo Nordisk has just been a one-way ticket lower. It's right. Down about 60% from its peak in 2024. Why is that? And do you have a preference for Lilly over Novo?
I do. It's really an unbelievable fall from grace that Novo has had, like you said, down 60% from its peak. And the biggest reason for that is that, well, there's kind of two. One, Lilly has better drugs. They are more efficacious. They have similar safety profiles, but they have a better product. A lot of people have heard of Ozempic and Wegovy, but not a lot of people have heard of Lilly's drugs, which are Zepbound and Mounjaro. But they're actually now, as of a couple weeks ago, Lilly has taken a larger share of the market. They're over 50% market share in this asset class now. So they have better drugs. And the other thing is that they have a better commercialization strategy. They have, obviously, they're doing less direct-to-consumer marketing, but they're proven to be very effective in marketing to physicians. Every physician I talk to, not just whether it be a primary care or a cardiologist or basically anybody, they can't prescribe enough of these drugs because it not only treats diabetes and obesity, which are massive chronic illnesses, but it also reduces the risk of heart disease, of sleep apnea, of chronic kidney disease. The list goes on, and it's now being studied in Alzheimer's and all sorts of other things as well. So, all that to say that this opportunity is huge, and Lilly has the better mousetrap to address it.
Your second pick is Abbott Labs. This one obviously was a very big pandemic darling because they were making the testing kits. and then it has come off. It actually just reported results, though, and the market is greeting it very well. I'm sure you're happy about that as a shareholder. What's the Abbott Labs story today?
Yeah, a little bit risky making a top pick, something that was reporting earnings this morning, but they pulled through for me and the stock's up about 5%. So happy to see that. The way I would describe Abbott is that some similarities to Medtronic in that they're a large, diversified med tech company. But the difference is that medtech is only about half of their business. They have another half of the business, which is it's a little bit lower growth, but it's more stable and predictable. So they have a nutrition business, they have a established pharmaceuticals business, and they have the diagnostics business, which obviously went gangbusters during COVID. But they're a little bit more diversified than a pure medtech company. What's most exciting about Abbott, though, is definitely the medtech business. They are, I would say, they used to be the number 2 player in diabetes in CGMs, continuous glucose monitors for people with diabetes. That's
sort of my new thing. I feel like it was step counting, and now everyone's talking to me about continuous glucose monitoring. Right. And I don't have diabetes, but I did it just for fun, just to see how do I react to certain things that people say are bad for you.
And what product which device did you have?
It was Abbott. The
Lingo?
Is Libra?
Well, Libre is prescribed for diabetics.
Oh, okay.
Lingo
then it must
is
have
over
been
the
Lingo.
counter.
It's the over-the-counter one.
Yeah. So it used to be perceived that Dexcom had higher accuracy. It was kind of the Cadillac of CGMs. Abbott has really caught up in the last few years. Their Libre 3, which they launched last year, is as accurate. If you talk to endocrinologists, they'll tell you, I don't really have a preference. And in fact, a lot of patients find it easier to access the Libre. It's a simpler interface. They can get it from the pharmacy. So there is a bit of a preference for Abbott. So this is a story of Abbott taking market share from Dexcom, the market leader. And they reported this morning, diabetes grown almost 20%, and it's 16% of their business. So it's a material product.
So how can you like something that like Eli Lilly, which, helps to treat diabetes, and then one that is meant to capitalize on the growth of diabetics?
Yeah. So I think, well, first of all, the patient population, the opportunity in diabetes is so big that we haven't even scratched the surface in terms of market penetration. There's 500 million people in the world with diabetes. 40 million of those people are in the US alone. And we're not even close to that many people on CGMs or on GLP-1s. So both companies have a lot of room to grow. I think that what GLP-1s are doing is they're shrinking the funnel for people that are pre-diabetic that are actually going to fall into diabetes. Those people are still probably good candidates for CGMs, where they need to monitor their blood glucose levels. They need to watch what they're eating and their exercise. They still need to know because they're at higher risk of diabetes versus someone, that's basically a bigger risk to pump makers, which have pumps that produce that's for people with diabetes that rely on insulin. Whereas I think Abbott has a place in the world or for people that don't necessarily need insulin, but still need to monitor their A1C levels.
So you think that singular catalyst, well, I know you said it's diversified, but that's kind of a next big catalyst. How big do you think that business gets for Abbott?
It's about $2 billion a quarter, so $8 billion a year. I think that business, similar to, it probably doubles over the next 5 years. There's a huge opportunity. The type 1 population in CGMs is quite penetrated. There's a lot of people, if you have type 1, standard of care now is that you're on a CGM. Type 2, there's different kind of categories of people with type 2. Some take daily insulin, some take it in the morning just to keep their levels up. Some people don't take insulin but still need to use a CGM. As you go down these different, the risk spectrum of these populations, there's less and less penetration. So Abbott needs to focus, and they've proven to be successful in some of these further down market opportunities.
And then there's tourists like me who don't have diabetes. It's like, just slap this on for fun. And it's so easy. You just put it on your arm and then you can check it with your phone.
That's right.
Anyway, it was a lot of fun to see the spikes and I can eat this and I'm totally fine. Let's squeeze in your third pick here. This one is McKesson. Why is the stock held up so well?
Yeah, so McKesson is the ultimate defensive safe haven company in healthcare. It is clearly a place where people are hiding right now. You could argue a bit of a crowded trade, but I do think that in this market environment, this is a great name to own. There's still room for more multiple expansion, and I really like McKesson. So McKesson is one of the big three drug distributors in the US. It's an oligopoly. Basically what the distributors do, or the wholesalers, some people call them, is they buy products in bulk from drug manufacturers. They store them, they ship them, and handle them, and they deliver them to providers, hospitals, pharmacies, places that prescribe drugs, and they take a spread on that transaction. Between the three companies, they touch over 90% of medicine in the US. It's a very sticky, stable business. The margins are low, but they're very consistent and very reliable. What's interesting about McKesson is that they're growing their specialty business quite rapidly. And what that means is drugs that require more than just, putting a box in the back of a truck and taking it to a pharmacy. Specialty pharmaceuticals can need sterilization. They may need cold storage. They may require, they may be narcotics, so more security requirements. Basically, they're charging a premium for the specialized handling of certain products. GLP-1s fall into that category. So the more GLPs that are consumed, that they're a beneficiary of this. And all of that is driving a much better growth profile than what we've seen from these companies in the past few years. So McKesson's going to grow their earnings about 12 to 14% a year. That's their long-term target. It's trading at about a below market multiple right now. So I do think that that's still quite attractive growth for a reasonable price.
You still see more upside, even though it's done so well relative to the market.
I do. I don't think this stock doubles, but I do think that it continues on its current trajectory, which is, if you look at the chart, it's up and to the right for several years. So I think that has some momentum, and I think that trajectory will sustain itself.
Rob, this was so fascinating. Thank you so much.